Crypto right now is $2.7 trillion industry. It'll probably finish this cycle at $10 to $15 trillion, and by 2030 or so, it'll be $100 trillion. This is the banana zone. So what happens at about this point in time, what we call crypto summer, we have this little shuffle around the all-time highs, and then everything just goes bananas. So I don't care whether this is tomorrow or in a month's time, because to Phil's point, the number about to go up. And don't overcomplicate it. Everyone will overcomplicate this. They'll be looking at weekly charts, daily charts, hourly charts, tick chart. Just forget it. You should have a year plus to make a lot of money.
Imagine an opportunity so massive, so unprecedented, that it has the potential to create more wealth than the entire U.S. stock market has accumulated over the past century in just a decade. That's the mind-blowing prediction from renowned investor Raoul Pal regarding the cryptocurrency market. According to Pal, we're in the early stages of the fastest and largest accumulation of wealth in human history. The numbers are staggering. The crypto industry, currently valued at $2.7 trillion, could balloon to $10 to $15 trillion by the end of this cycle, and an astonishing $100 trillion by 2030. So what's driving this explosive growth? Limited supply colliding with exponentially increasing demand. Pal argues that real crypto supply is much lower than you think, due to factors like long-term holders who never sell and continuously decreasing mining rewards. But that's just the tip of the iceberg. In this interview, Pal dives deep into the unique dynamics of this alien asset class that has no historical precedent. He'll reveal why most people are struggling to comprehend the true potential of crypto and why it's crucial not to overthink the situation. Get ready to have your mind blown as we bring you the latest insights from one of the most respected voices in the crypto space. Don't miss these must-see clips that could change your financial future forever.
This crypto market is the biggest gift retail investors have ever been given.
Yeah.
Pretty common around the all-time highs that, people take some chips off the table. We're seeing long-term wallet addresses taking some chips off the table. It's pretty common.
Yeah.
Ahead of the halving. Then it normally goes into what I refer to as the banana zone. And that's when you get the real price action. So the real price action hasn't happened yet. The reason we can't is we can't think in exponentials. We just simply can't as humans. Right? I mean, every single person I know, except a few, got wrong Google, got wrong Amazon, got wrong Tesla, got wrong Apple, all of these things. They're all network adoption models. Everyone got them wrong because we can't understand exponentials where growth compounds. And we're seeing it yet again with AI. This is even faster. And humans just can't extrapolate this rate of change. It's that. If the really important thing is crypto right now is $2.7 trillion industry. It'll probably finish this cycle at $10 to $15 trillion. And by 2030 or so, it'll be $100 trillion, right? This is the largest, fastest accumulation of wealth in all human history. It's as simple as that. That's what that chart tells you. Now, what everybody does, and Howard, you explained, there is a bell curve. And you want to be on the left of the bell curve, which is actually the same as being the Jedi Master on the right of the bell curve. Everybody in the middle who overthinks it, it's simple. Number go up. That's the whole crypto thematic that you need to know. You can either do all the deep dive, and I must have done 10,000 hours on this, and I might be at the right side of the curve sometimes, but I don't mind being the left either. Just don't overthink it. The moment you overthink it, that's when you get yourself into trouble and you start not seeing it for what it is. You see it for what you want it to be.
One of the key points Pal makes is that the actual supply of cryptocurrencies like Bitcoin and Ethereum is much lower than it appears due to factors like long-term holders who never sell, 80% in the case of Bitcoin, and the halving of mining rewards every 4 years. This limited supply, combined with increasing demand, is driving up prices. Pal also highlights the unique risk-reward profile of cryptocurrencies, citing a fidelity chart that shows crypto as an alien asset class with no historical precedent in terms of potential returns. He believes that the money made in this space will be la-la land, with investors choosing to reinvest in assets like property and NFTs rather than splurging on luxury items.
If you go to the ludicrous thing that Paul Tudor Jones mentioned a while ago, and Stan Druckenmiller talked about, is 80% of Bitcoin holders don't sell ever.
Yeah. Correct. They're in cold storage.
Yeah, I mean, and it's the same with Ethereum, with the staking and everything else. So your actual supply is 20% plus the miners. The miners keep getting halved every 4 years. So you've got no supply. So that's 20% of the let's say of the entire asset class, 2.7 trillion is actually available to buy. You bring something like an ETF and things go bananas, right? The more people who adopt it, the more the price rises. Also, the really key thing is, I don't know if you guys have ever seen the chart from Fidelity about the risk reward of assets. It's brilliant. So there's this big white page, all Fidelity branded, and here's a cluster of here's the NASDAQ, and here's gold, and here's oil, and here's all of that. They're all clustered in the bottom. Then there's a blank page, blank page, blank page, blank page, blank page, dot, Bitcoin. It's a fucking alien asset class. We have never, ever had an asset class with this risk reward over a long-term time horizon and this performance in all of human history. If I'm right that this is the fastest, largest accumulation of wealth in all human history, right? If it goes to 100 trillion, to JC's point, the S&P is worth $50 trillion, or the US stock market, entire US stock. That's 100 years of accumulated value.
It's mostly S&P, Raoul.
Yeah, it is. It's 100 years of accumulated value, and we're going to double that in a decade. It's like, this is la la land, right? The amount of money that's going to get made here is la la land. So what do they do with the money? I was speaking to a very famous hedge fund manager yesterday, and he asked his son this, and this guy is deep crypto, and his son is too. And his son's like 25, 26. He said, what are you going to do when you make your millions? He's like, well, I'll keep it in crypto. He's like, but when you take any money out, what will you do? He said, I'll buy property. And his dad was like, well, do you want to buy a super yacht or anything like that? He goes, no, it's a waste of money. But I'll buy property because it's an asset, and I will buy NFTs, the money in your bank account, and you don't own the securities you think you own. And when you saw Lehman, you saw that there's a few collateral assets and there's all this leverage, and it's a big game of musical chairs for who gets a slice of the collateral, right? Nobody owns anything. Blockchain changes that because it's provable who owns it. You can give permission to rehypothecate them, or you cannot, right? So it's a game changer for that. But even in terms of trading, it gives you a whole new set of stuff you didn't have before. Like funding rates are just brilliant, because you can see in real time what you'd have to get from a prime broker at Goldman, how funding rates for a particular stock are trading. But here you can see it in real time. You can see when it's liquidated. If you add that with a bit of technical analysis, you've now got a really nice system to figure out, okay, have we got another leg lower, or is this over? Stuff like that are driven by liquidity cycles, real assets, value stocks, commodities. They're all just the business cycle. And the business cycle's going up now. So these things have been playing catch up. They were dogs. Now, as the economy starts re-strengthening, these will do well. And so everyone got left behind because they didn't do anything last year. And now they should do really well. And they should do really well in macro summer, macro fall. So they should just keep doing well over time. They'll have periods where they'll outperform what tech did, because tech, went off to the races to start with. So I think it's very consistent. And bond yields are just a function of that too. If the economy's strengthening, then bond yields tend to rise somewhat. But the Fed can't let them rise too much, because the Treasury needs to refinance all its debts. And we've got this massive debt payments coming up.